Hey everybody, Trendy John here from Simpler Trading. I am a professional supply and demand trader. Melissa and I teach you how to identify the bigger turning points in the market by using structure. Our job is to give you that edge by becoming more confident and consistent in your trading, but getting rid of the old retail mindset. We identify levels, big turning levels in the market. And the biggest part of this broad market analysis is understanding that news and all that type of noise is just catalyst that pushes price into supply and demand. So let's go ahead and get started with this week's broad market analysis. The major US economic reports and Fed speakers, these are coming in on Eastern time. S&P Flash US Services PMI tomorrow, Monday at 9:45 Eastern. Tuesday, March the 25th, you're looking at consumer confidence coming in at 10 o'clock Eastern. On Wednesday, we're looking at durable goods minus transportation, 8:30 Eastern. And then on Thursday, initial jobless claims, GDP second revision coming in at 8:30 Eastern time. And then moving on down, we have some Fed speakers you can see here at towards actually at the end of the market, so at the close. And then on Friday, looking at personal income, personal spending, PCE index, core PCE year over year, and once again, consumer sentiment coming in on Friday. So, not a whole lot, but again, these catalysts can create some volatility in the market. Before we move on, please go ahead and hit the like button. And if you have any traders or friends or family out there who would like to learn about trading, please point them towards simpler trading, but also share this video with them as it is a free video that I believe really helps us to get started for this week. The next thing that I'm going to be looking at is going to be this week's earnings. What I like to use is out here on X, and I use right here this handle. It's called at E Whispers. They've always been very consistent, and all I have to do is just come over here every Sunday and take a look at what's on the calendar. So far as the information that's on the calendar, it is catalyst. Once again, even though it's an earnings report, you probably have been taught or told over many, many years that earnings is just a gamble. Well, guess what? This Thursday, I'll be hosting another educational piece, part of your 12 classes that you're getting with the last package that you purchase. And I'm happy to say I'll be teaching how to trade into earnings with confidence and consistency by using supply and demand. It's one of my favorite things to do. We actually just did this on MU last week, where not only did we take profits on the put side, identifying a demand zone, but we also have a very long term trade that barely even got touched. Let's go ahead and come over here and take a look at what I'm seeing this week, what I'm interested in. Now, not all of these will I trade into earnings. A lot of times, what I'm looking for are bigger moves than expected by identifying those supply and demand zones. I'm also looking for names that move a lot or just names that I'm familiar with. So, looking here, the first thing that I'm noticing when I come into this week is, GameStop. Here's a name that typically has a lot of volatility behind it. But to be very honest, I most likely will not trade this name. I'm more interested in things like on Wednesday, Dollar Tree, Chewy. Chewy is a great name, great company, and I believe it's going a lot of places. Moving over into the Thursday, I love this name, Lululemon. And as I move into, or as we get closer to the summer, I'm really interested in WGO or Winnebago. Moving on down, we'll continue to look for names that look familiar to me. I don't really see anything else that I personally am interested in, but please be sure to understand what names are reporting and if they have any impact on your long term trades, or perhaps you're in something that is related to this name and can be impacted by the earnings. Let's go ahead and move on. We'll be looking at TradingView. I absolutely love TradingView for using the bigger picture, but I also love that you can save templates and all that type of stuff. And my indicators are also on this chart. I do execute from Thinkorswim, but I do like to use these charts, so that's what I'm using here. Let's go ahead and start with SPY. We're looking at the bigger picture. This is a quarterly candle. That means each candle represents 3 months. And as I've said before, and I'll continue to repeat, the price action really loves the cloud. For if some reason we come back into this trendy cloud this year, I will be looking for support to happen there. Notice this has been happening and working for a very, very long period of time. Matter of fact, the last time that it actually broke under and stayed under was in the year of 2008. Since then, or I should say, since 2011, right here, since we reclaimed that level, we've been staying above that cloud, and you can see how important it is to understand how this acts as support. Okay. Now, what I noticed in 2024 in December going into 2025 is that this year was starting out with very big divergence between price and where the cloud was at the moment. There was just too much divergence. Matter of fact, going back, you could see that no matter what, price always comes back to the cloud. It's not if, it's when. And it felt a little too stretched, which made me understand that I did not want to be fully allocated to the upside to the beginning of this year. So I am slowly adding into longer term positions. Far as notes go, I try to keep it really simple and easy. No reason to cloud your judgment or your mind with a lot of noise. Let's forget about everything that you see out there on social media. And if you're in the trendy room, you shouldn't be looking at news. Let's concentrate on price and the technicals. This week is looking a lot like a flush low followed by a possible round and bottom. And I'm going to show you that here in a second on Thinkorswim. The week closed inside as I expected, but price only closed $1 up from last week, showing that not much really actually happened this past week. It's just really choppy. We have 8 days until this quarter candle closes. There is a possibility that price closes within the body of last quarter's body, between 573 and 586. The two major levels this week are 555, that's your future lower monthly edge, and 573, the Fibonacci 38.2. 562 and 533 remain support. Let's talk about what I mean when I say that this quarter, by the end of the 8 days, could close within the last body. You'll notice that I have these two alerts here set on TradingView, and if I hover over them, you'll see where those are, 586.13 and down here 573.22. Basically all I'm doing is looking at the last quarter, and this is the body here, and what I'm telling you is that this quarterly candle could end up closing between this area right in here. Now let's go ahead and move on into SPY. This is Thinkorswim. I want to show you a smaller picture. Notice that 2 weeks ago, we came into the level I was looking for. This is what I mean by when I say there's a flush low. And this is what I mean by there is a potential for a rounding bottom. Typical rounding bottoms look like this. Prices drop, okay? And then you get this really big wick. That is called the flush low. That's where a lot of traders, they basically place their stops. And then what you see is the next week comes in, okay, it looks something like this. And even though there's a drop, there's a higher low. And now what we did was we closed inside the body of this big flush low candle. What I'd be looking for now, if things go the right way, is an inside and up formation. So basically going over the body of this and getting that rounding bottom. And I'll have different scenarios for you towards the end of this broad market analysis so that you understand what I'm looking for. As I said, this past week, the candle closed within the body of last week. This sets us up for potential inside and up or inside and down. I'll show you on the ES futures what I mean towards the end of the video. Your two major levels, the ones that I mentioned before, are right here. 573.91, which is the 38.2. And then I'm using this purple line right here, which is your future monthly edge. That's part of my indicators that identify supply and demand. Okay. So again, this level, if we hover over it, just, or basically at 555. Okay. So 555 and this 38.2, 573, call it 574. Now do understand that there is a golden pocket up here above. This golden pocket, I believe, if we were to get over the 38.2 and reach into there, this could be a potential for a nice little get short once again for a move back over. And we could see an H formation. Of course, if price gets up here, we will assess, but we could see something like this. So please keep that in mind. Let's go ahead and move back on. We're going to get back over here into trading view. And the next thing that we're going to be looking at is the QQQ and looking at the big picture. Now, it pretty much looks the same as the SPY. I won't go over the cloud with you again, but it is important to understand that it has worked a lot. And if for some reason we start to move down there, I'll be looking for support. Okay. There are different things that we'll be teaching once we get here. You know, we don't just blindly say, hey, it touched it, let's go long. So again, please don't get that twisted. All right. Let's go ahead and read the notes here. Just like the SPY, it's starting to look like a flush low on the weekly. Again, this is the quarterly, and perhaps the start of a rounding bottom. The two major levels this week are 472, which is the future lower monthly edge, and 495, which is the 38.2. 468 is near term support. Okay. Under 462, I'd expect an attempt in the next few weeks to see the 9 EMA, which is right here. Something I've wanted to see for a very long time now. I mentioned that as we were coming into 2025, but we did take note of it back in the October, September timeframe that we were getting very extended. And now you're starting to see the market sort of roll over a little bit. Okay. Now, just like before, let's go ahead and take a look at the Thinkorswim. So we're going to come over here, take a look at the weekly. Same thing. This is the weekly. These are the major levels that I'm looking for. So right here is that future monthly edge identifying some demand. So that's around 471.5, 472. And then your next major level is going to be the 38.2, which is 496, 495.88. Just like the SPY, we do have a golden pocket, and if for some reason we were to reach up to here, I do believe that this could turn into a nice short opportunity. Notice that the 618s held very, very well. Okay, so at the end of the day, when I was saying that your near support is 468, this is what I'm referencing. Let's go ahead and move on. The next thing that we want to look at is trading view one more time. I want to be looking at the dollar. In order to see the dollar, we type in DXY. All right. And I'm going to show you a bigger picture really quick. And again, this is the quarterly, and then we'll get into the weekly. Notice that things are just really choppy, and the dollar is moving from supply into demand. When I decrease the time frame, we're going to go to a weekly. You're going to notice that things look different. That's why it's important to toggle through your different time frames. This is starting to look bullish. The dollar's starting to bounce a little bit. Perhaps the dollar could bounce towards 105 all the way up into this level here, which is the 38.2, closer to 106. Your two major levels are the same as last week, 101.5 and 107.5. Everything between there is just pretty much noise, not a difference from last week. So let's now go into the 10-year Treasury. Why is this really, really important, and why do I go over it every week? Well, the yield on the 10-year Treasury is a key indicator, okay, of market expectations for interest rates and economic conditions. So when the yield rises, it reflects higher rates. When it falls, it reflects lower rates. In the 80s, rates had skyrocketed to curb inflation. So it's really important that I continue to watch this as anything could happen. For the last several weeks, things are just really, and I should say several months, are just trading between the two major levels or the two major zones. Okay. They're working really, really well. Technically, I see this moving towards 3.8 into the June July timeframe. For now, caution is warranted in the overall market, especially if we see above 5.005. So basically above the supply zone. Remember, I don't think that rates, I'm actually looking for, and again, this is just my opinion, but I'm looking for rates to drop down into, as I said before, below that 3%, or sorry, 3. Okay. So the reason why 3.8, so right here, I had that demand zone and we could come in here. Now, I don't typically show you a quarterly candle on the 10-year Treasury. I will say that, look, this is my opinion that we continue to go down here. Technically speaking, as long as we stay above the cloud, and right here in this supply, we're just going to continue to bounce like this, okay? Now, the reason why I'm calling for a move all the way to 3.8 is because the zone has not been tested in quite some time, and things are starting to look a little bit more bearish on a smaller time frame, okay? Now, big time frame, again, I want to bring this up to you. It looks fine. A matter of fact, if this was any other stock, I'd be saying, hey guys, as long as we hold this support here of the EMA cloud, there's potential that we could end up going inside and up here. And I'm not saying it would be like the 80s, guys. It's hard to fathom that things would actually go up on the rate side, right? Even with projections and so forth. But when I think of like curbing inflation, well, those are just things I think about. But for right now, let's get over to the weekly. And again, on the smaller time frames, I could see this rolling over and pulling back down. Notice that the cloud is resistance until proven otherwise. Notice that the green candles have went white, which means neutral. And sometimes we go from neutral to red. So if we go neutral to a red, so that means from a white candle to a red candle, and we have this demand zone down here, there is a possibility that we drop towards 3.81. And again, I'm looking for that in June, July. If for some reason this demand zone gets flushed, then we could see the 10-year come all the way back down into 2.9. Now, short term, I would just like to see this flatten out a little bit for now. Okay. The next thing that I want to be looking at is the skew, another very important part of my overall broad market analysis. But very important for you guys to understand that the skew is just a useful tool for gauging market sentiment and potential risk. It's one of many indicators that I'm sharing with you guys, and it should not be used in isolation for making trading decisions, but rather in conjunction with other market analysis that I'm providing for you. Now, last week, I made it very clear, okay? The skew has not closed under the risk on the 5-day level 2 weeks consecutively since March 2023. The overall market has bounced every single damn time since then. And this is something that I identified over a year and a half ago. And look how well it's working. So this was the level that I pointed out to you guys. Price did come here, and I said, look, if you want to try this idea, buying calls 5 to 10 days out, and you can see that the market ended up pushing back to the upside. Not much. Again, guys, we had really nice bounces last week, but overall, the market only closed up about $1 and some change. Now, there is potential that the market continues to push here because, listen, basically what you're looking at is down here, your risk on, up here, your risk off, meaning overall market. Okay. So we come down into here, and again, no 2 weeks have closed underneath here for a very long time. And what happens in the background is you got the SPY starting to bounce when we come into this area, or the Qs, or the Dow, or the RTY. Well, maybe not the RTY, right? So again, we started to bounce towards Friday. Things were looking a little bit more decent, and they do have some room to project to the upside before we come into that risk off area. Okay. Now, again, we'll start back over. So look, we had 1 week down, did not get the 2 weeks. The 1 week closed above. The market kind of pushed to the upside here. Now, as a reminder, this is a lot different than the many, many years that I've been teaching this. In most cases, this is super extreme, and this is super extreme towards here. However, we are living in extreme conditions, volatile conditions. This is becoming the norm. So this is how we adapt. This is how we become Gumby, if you will, very flexible, and understanding that what we have for the last 2 years is this is where your extreme fear comes in, and up here is where your extreme greed comes in. So this level has not been tested in over 2 years. It is still possible, but things have changed. Going into next week, my overall thought is the market is neutral, and I'll get to that by peeking into and looking at the futures, which I'll get to here in a second. However, fear and greed remains at extreme fear. So last week this was at 20, and you guys can see that. It might have been 21 when I reported on it. So it's only ticked up 2 points. And again, the market's only went up $1 on the close. So where do we want to be? Well, obviously, I think a lot of traders would like to see this kind of tick towards neutral and maybe towards the greed index again. And that just means that participants start to feel a little bit more confident in the market. And so therefore, we could see a bounce coming in. This is, I want to say, coming in on, let's see, 1 month ago was fear. So it's been an extreme fear and fear for quite some time. I think about 5 weeks now. Okay. So participants are primarily either sitting on their hands or buying puts. So in my opinion, it could come down to a rip sort of type of nice relief bounce, and we could see that coming into this week, and I'm about to show you why. So coming over here, let's go ahead and get into the ES futures. And again, guys, I changed from the H contract into the regular ES. On the weekly, let's go ahead and go over it. Again, I am neutral. We got the inside week. That's what I was looking for. We can use the start of this formation to give us clues, but we will not know the actual outcome until the close of this Friday. For now, use the last week's body. So where I have identified these two levels and where this green box are the body 2 weeks ago. This past week, we closed inside that body. As I teach in the room, we will be looking for clues of inside and up versus inside and down. Basically, if we break over this last week's top of the body, we're going inside and up, but it's only during that time that it's happening. I won't know if it actually closes inside up and up until the end of Friday. But what it does give us is the idea of anticipating an inside and up as long as we stay above that body. And if it stays above that body, there is a potential for a move into my targets, which would be 5833 by 5915. If for some reason things fall to the downside, it's underneath the body of last week. And as prices start to fall here, and if we break below, there is potential we see a move back down towards 5563 by 5437. That would give us an inside and down formation. Please understand that the inside and up and or inside and down does not have to happen this week. Matter of fact, what we could get are 2 inside weeks. We could get 3 inside weeks as long as price closes between this body, which is the mother candle or the drop base, either rally or drop candle. For now, it's just all inside. You have targets on both sides. Look at it as a neutral strategy, if you will. Okay. Let's go ahead and move on. We'll move now into the daily. And so here we are looking at daily candles. We came into triggers. They worked really well. My resistance, I'm basically placing it at the upper weekly edge. You'll notice a couple things on this daily. That is the 200 SMA and these blue dots. We are underpriced, and price could be trying to push it back up towards that level. My short trigger comes in at or around a base drop formation, and this is your 50 SMA up here. As far as these triggers go, again, in the room, we use very specific guidelines to get into and or out of trades. These are not blind setups. Just because they say that doesn't mean that we necessarily take it because of that. Let's go ahead and move into a 4-hour. These are your 4-hour zones. These are smaller zones, and these are to identify where we can see buyers and sellers show up. A couple things noted here, okay? What I could do, what I did on the Qs, and the Nasdaq, which you'll see here in a second, is you could come up here and use this and understand that we're at a supply zone that's already been tested. I went ahead on the ES futures is showing you a new zone, and then some zones down below, a 2-hour and 4-hour. We'll refer back to these during the week. Let's go ahead and now move on to the Nasdaq. A lot like the Nasdaq, it's the same way. We closed inside this Friday. We might know if it's an inside and up or inside and down by the close of Friday. But for now, it could lead us in anticipating whether or not we have an inside and down or an inside and up formation. So apply the same thing that I was just talking about. These are targets for the inside and down. These are targets for the inside and up. One thing I forgot to mention is if we go inside and up here, we really have this really nice range to trade into the next earnings. So looking at banks, like when are banks going to report? And since we're looking really quick, let's just pull up Goldman Sachs, for example, and get an idea here when these guys are getting ready to report. We come over here and you guys can see it's April 14th. So we're not very far away at all. So we're getting ready for the kickoff into the next earnings cycle. Okay. So again, getting ready for the next kickoff into the next earnings cycle. So when I think about that and I come over here, it makes sense to me that on the ES and the NASDAQ, there's a potential setup here that now we have a really good range going into this upcoming week. We have a beautiful supply zone that's very identifiable by looking at the rally, base, drop, or the inside and down. And there's the potential, and again, I will not know until Friday, we could be going drop, base, rally, and then we have a trading range into this next cycle of earnings. I'm very excited about this week's candle. Okay. Moving on, let's get into the daily. Same thing, folks. We have a resistance point coming in at a trendy edge. I want you to take note of the 200 SMA and also the 50. Just keep your eyes on it. And then I have my triggers. And as I explained on the ES, this is not a blind trigger to go long or short. There are different criteria methods that we use in the room and that we teach to get long and or short at these levels. Let's go ahead and get into the 4-hour. So you can see here, I identified a zone for you. And if you click there, you'll see it right in here. But it's already been tested. So as long as we stay on over the proximal, I would stay long here, but just understanding that resistance comes in around 20,100. If we break up and over this, we'll be headed to our 4-hour zone that is new. And it looks like it's fresh. So please understand that as well. These are the major zones for the 4-hour. To finish this, I'm going to go ahead and take a look at the at Bitcoin. I am a Bitcoin holder, so I like to keep my eyes on this. And I'll go back over here. Not many things have changed. I think my last ad was 81,000. We have a demand lower risk down here. If prices were to get back into here, I'd be looking to add some more. But for now, we'll just kind of maintain. Well, I'll go ahead and continue to maintain and just watch price action. So far, it's holding the monthly 9 EMA. My focus is the monthly. And again, we have this beautiful zone down here. If prices continue or to break down in the market and we see Bitcoin come down, then we have a plan there going forward. Overall, folks, I really appreciate your attention and the confidence that you also give me. I hope that I give you in this weekly broad market analysis. Once again, don't forget to hit that like, and we'll see you again on the trading floor tomorrow morning, 30 minutes before the market opens. Have an amazing rest of your weekend.